Traders, welcome back to the channel. We're going over the SP 500, specifically what's happening right now with the crash, the recession, inflation numbers, the big news that was released today, which we need to talk about, and how this is shaping up for a catastrophic drop over the next few weeks. All I ask is you consider doing two things: liking and subscribing, because I'm giving you the transparent and news you need to know regarding the S&P. This is not fear mongering. This is all backed up with data and facts. Let's get to it. So the first one we're going to look at is this pattern. And I know this is what everyone's dying to look at. You're seeing it probably everywhere: the head and shoulders, your left, your head, your right shoulder. That's what's going on. And if you're looking, in my opinion, the break point here was about 405. And it looks like you're scaling down to the downside pretty rapidly. We're going to go into exactly what happened in here today. But I want to do really quick is just show you kind of what happened previously back in 06, 08 region that led to that really nasty dip way back when. Now, again, rough drawing, stay with me. But this is where I was looking. You can point out and kind of say this was your other shoulder. I don't like this as an example, just at how it played out. I don't think it's an exact replica or good enough example, but you can see the key levels I was watching here. There's a video about 130. After you broke that, you came back, retested, and boom, tossed back down. I would have been looking more at this region back here. That was a key area for me, but looking again here, that's what I was looking at. And you can kind of see that reaction, but it was more stagnated, more drawn out. I think right now, from a stock perspective, this is more dangerous. This is more terrifying. From a housing market perspective, that was way worse back in 08. Now looking here, you can see the volatility here. Look at how much quicker this is happening. The top head level on the previous chart took about a year to play out. This one took about 4 months. So looking at that, this is more concerning and how you're breaking down there. What I want to look at here is about the 5 minute and show you what's happening on a daily time frame and give you overall targets and examples of what I'm looking at to happen over the next few days, hours, and weeks, right? So you're getting that top off action here on 403 to 405. And this was your previous lows you made here that became a massive resistance, and you're breaking down. This represents a $400 mental level, and I think you're targeting right now 390 flat. Now, I want to give you both cases. Before we go any further, I'm going to give you exactly what I'm looking at when it comes to trading. Now, me personally, I'm trading a lot of puts, specifically on big cap names, Tesla and Amazon. Those are my favorites to trade puts on right now. That's how I've been making the bread and butter money right now. But if you're looking here, let's talk about a trend change. If by some miracle you push back up here and you break above 405, 406 and retest, this level right here becomes a buying opportunity for the long side play, maybe to 420, 425. That's where I'd be aiming. Now you have to get a break first. You don't want to buy the break. You want to buy the retest of said break because it'll probably continue. That's unlikely in my opinion. I'll get into why based on the data. Now for the downside, I've been already trading downside pressure. I've been writing this down. Right before this, I just got out of a Tesla put with the Discord. As you're looking now, you're probably going to keep scaling down. When you test this area, I project some type of bounce, but once you make it through this region, a retest of 390, and I see this thing really folding over towards 380 and eventually aiming down towards 350 to really start trying to bottom out down in that region. Now, it could go further. I can't give you an exact target for the dip and where the bottom of the stock market is, but as of right now, that's going to be like kind of my mid to longer term targets around 350, 360, but we need to get below 390 first. But right now, you're just sitting overall in this channel, and in my opinion, it's looking very, very bearish. Now, I'm going to go to the Nasdaq here in a sec, but I got to point out a few major key things here. First, CPI data. This was the big one. So you came out today at 0.6, forecast was 0.4, previous was 0.3. Now, how I explained this previously, I don't really know how exactly I explained it in my previous videos, but the easiest way to say what CPI is based on inflation points is it's everything consumers are paying for, me and you, and how they're being priced, minus food and minus gas. The end. It's everything. It's your clothes, your accessories you're buying, any tech, everything you're buying is the price, in theory, going up. And the answer is yes. And so what you're seeing here is a 0.3 increase from the previous month to 0.6. Lining this up with the inflation numbers, this is leading me to believe, and obviously the rest of the market to believe, that more inflation numbers are coming and that we have not peaked. Now, I want to highlight what Fed Bostic was saying. He's one of the members of the board going on what makes decisions with rate hikes. He's typically one of the bullish or the dovish members. And he came out and made a lot of very concerning comments. Also, once again, I'm on Twitter. The link is down below if you want to check it out. I recommend following daily updates, things like that regarding trading. But Bostic said these worrisome statements. It's difficult to know right now where to stop on the balance sheet cuts. Concern number one. Then he said there's likely $1 to $2 trillion worth of excess liquidity that can be removed from the Fed balance sheet. So we're seeing extreme tightening. We're seeing the Fed say, look, inflation's hitting us, CPI is hitting us. We got to start tightening. We're going to start tightening. We got to start raising rates even higher. And then the icing on the cake for the day, near the beginning of the day, which really set the tone for all my puts, was this. He said that the 75 BP hike, he is not against it if the interest and the overall interest rates continue to persist. And as you're looking right now, they are persisting. So this is a major, major, major concern. So I'm looking specifically at this region and even how you're trading right now. You can see you make new lows on the S&P, and then those new lows then become a resistance. Just look at how you're trading. You come, you make these lows, now you're popping up, getting rejected, looking to push down even further. This is as bearish as things could possibly get. Looking at the Nasdaq, this is the big worrisome one in my opinion. You're trending in basically no man's land. The high point here, your clear resistance is 12.55. You continue to test it 1, 2, 3, 4, 5, roughly 6 times over the past 48 hours. And now you're back down to 12. I told everyone over a week to 2 weeks ago that you were coming down to 12 flat once you broke below 13. Once you really broke below 14.3 and you couldn't get above it, that's where you were going. But now look at where you're at. You're at 12 flat. Where's the next range? If you break below this, in my opinion, it's getting gross. And if you really have to come out to the 4-hour chart and really look at where your previous levels were, but in my opinion, after this, your target's got to be 11, 1 roughly. It's going to be those previous highs you had formed here, and this turned out to be a pretty massive resistance for the time being. So it's going to be a pretty big level, 11.4 down to basically 11.1, a $300 basically supply and demand zone down there. But in my opinion, this is going to be a magnet and a beeline if this holds below overnight, straight towards 11.5, 11.4. So you're looking more and more bearish by the day. But as you get back in here, I mean, I don't even see a bullish narrative here. You got to get back above 12.5 for tech. But ultimately, every single move that was just made over the past day and a half to the upside has been totally wiped out just with this data. And like I said, the data is going to tell the narrative of how things are going to continue to play out. And as you get more data, you're going to get clearer and clearer answers to where the market's moving. And right now, you continue to move towards the downside. And that's what I'm looking at specifically here. What I want to do right now is take a quick look at Bookmap and show you what's going on here as well. I'm going to show you 2 key things. 1, CVD, and then 2 is going to be the hidden order book. The blue right here, bottom right here, represents hidden orders. Now, when you're getting a dip like this, you're looking for bigger and larger orders, right? Don't pay attention to the green line. It's the blue line right here. So as you see, very small influxes, no real big buys. This is your biggest buy, and it's about 400 lots. That's nothing. So you want to see big buys to see a reversal. You're not getting any. And you're getting a decrease in a downtrending CVD, which in my opinion points to bears being in control. So again, all these playing out, in my opinion, have more downside on the market, and you're not seeing bulls step in and start taking command of the buying. So again, all of our indicators show more and more downside. What I will say is that you do have a lot of liquidity here. You can see all these ranges, but you can also see on the way down, you were taking out every liquidity zone because bears, once again, were in control. So in closing, what am I looking at? What do you need to be looking at? You need to hold above this range here, about 12 flat. You got to hold above it. If you do not hold above this range, you're pushing down, you are bearish, SPY will follow, everything like that. SPY, what's going on here? You need to start getting a bounce. You need to start getting love. You need to stay above 390. You got to. If you don't, it's going to get bad. You need to start actually getting above previous lows because you can see it's just the same ongoing pattern, right? So I just want to highlight really quick so you can see how to be trading this. Previous lows right there. You break below, look what happens. All this now becomes a resistance, 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 resistance. It's those previous lows. What happens here? You come down, new low, you break below it. Now look, resistance. You got to start getting back above these zones and reclaiming. Until that happens, you remain bearish and more downside is coming. You will continue sliding. That's what I'm looking at. More downside, most likely 390 test. The 1200 level has to hold as well in the Nasdaq. I ask you to consider doing two things: liking and subscribing. The daily content will continue coming, so you know everything you need to know regarding the S&P and the Nasdaq and how to be trading it every single day.